Hey guys, welcome to another episode of a market review using ICT trading concepts. In particular, the 2022 YouTube mentorship that he has available for free. Something I've been working on, something I've been practicing with, and recently started doing a series of market reviews just to further enhance my learning, share some of my ideas, and help others, and hold myself accountable to continue learning. So earlier today, I posted a higher time frame review of the dollar index, DXY, just a general market structure review, especially on the weekly and the daily level, and see what's been happening, what's been playing out, and what we can expect going forward. So I won't go into the DXY too in depth, but what I will say is based on what we see here on the daily time frame, what we can expect is a move into the buy side liquidity. So this high that we have on the from the 14th of July, and we're looking to try and trade above that, sweep the liquidity, and then see if we go higher or lower. And then based on this price action after the sweep, we can then take that over as a confluence over to the stock market, the index markets, and the forex pairs as well. Because as you know, if we have a bullish index, we would have a bearish confluence on the other markets and vice versa. So today, we haven't quite got that drive into the liquidity, but what I was expecting was for that to happen, and I was looking at potential short opportunities on S&P, NASDAQ, and I was looking at potential shorts on the EURUSD and GBP. But we didn't quite get that. Still seeing a bit of retracement here, which is fine. So it was just a case of watching the markets. Didn't get a great trading opportunity, which was absolutely fine. So let's take a look at the action on S&P. So on the S&P, I've got a couple of levels marked out. We have two areas of sell side liquidity, and we did actually get a touch of that sell side liquidity today, which lines up with a liquidity sweep on the sell side, the bias confluence that I had, but didn't really get the opportunity to take that trade, didn't get a short opportunity, and we still potentially could be moving into the sell side here that we have marked out, which would line up with a bullish dollar. So we also have the daily fair value gap marked out here, which could be tapped into in the future as part of a retracement. Let's drop into the hourly time frame. So I know that I've been talking about a bias confluence. However, after noticing the sweep of the liquidity on the sell side, taking out these two relative equal lows. So this candle here during the London trading session, we had a sweep of that liquidity and then a move up, which resulted in a market structure shift, taking out this swing high. And as you can see here, during that move, it did create a fair value gap here. So this may have set up as like a short-term intraday bullish trade, even though the overall confluence is bearish. There was still the opportunity to take a long here. So if we had taken a long here, our entry would have been during the New York AM kill zone. And if we take a look at the potential entry of that trade, it would be just at that fair value gap that's been created on the 15-minute time frame. And then we could either have our stop loss at this level, or we could drill down into a lower time frame to look for another swing low. So if I just drop down to the 5-minute chart, we can see a swing low created here. So to get a better risk to reward, we could take that as our stop loss. And if I just go back to the trade, so then your aim could have been, something like some partials here and some partials around of clearing these levels, and potentially higher up, you could take partials, and even your final target could be something over here. So clearing these highs here, and also tapping the daily fair value gap that we have up here. And that wouldn't have been achieved, but depending on if you're using a trailing stop loss or moving your stop loss higher, probably could have been knocked out there, and have a successful trade in profit. However, I was looking at this, I had marked this out, but I didn't take this intraday long. And the reason for that is, if we switch over and take a look at the NASDAQ market, we can see a similar price action pattern. However, as we saw liquidity being taken on the sell side on the S&P, we didn't quite hit those levels on the NASDAQ. So what I've got here on the NASDAQ is this area of interest for liquidity, and we didn't quite tap that. So what I was thinking is, during that time period, it wasn't looking very, I wasn't very confident in taking that intraday long on the S&P, just because NASDAQ could have decided to go lower, and as the two S&P and the NASDAQ move together, and that may have dragged down the S&P as well, which would have invalidated this trade idea. And it also lined up with the bullish confluence on the dollar, where we were aiming for the buy side liquidity. So that didn't quite get hit, which could have done, which would have would have had an inverse price action for S&P and NASDAQ. So it wasn't looking like a very strong trade this long, so didn't take that. But if I had, would have taken some profit there. But it's just one of those things. Just something good to just mark out and just see what happened. However, still going forward, still do have a bearish confluence with this on the daily. If we take a look again, we can see potentially a retracement into the fair value gap, and ultimately aiming for further sell side liquidity on the indexes. So yeah, not a solid trade opportunity, but it was just something good to just see happen, and take notes and reflect on it right now. In terms of the Forex markets, we've got the Euro USD. On the 22nd, on Monday, we had this sell side liquidity taken out, and we are essentially seeing a yeah, I'm not too sure if the camera of myself was blocking that, but yeah, on the daily we can see that the sell side liquidity from the 14th of July was taken out on Monday, and yesterday we look to see a swing low being created, which may indicate a move higher potentially. So could be an opportunity to look for longs. However, until the dollar has swept that buy side liquidity, just need to be a little bit extra careful, taking trades in the opposite direction as to what the dollar confluence is. And if we take a quick look at GU as well, we can pretty much see some similar type of price action. So a sweep of the 14th of July low, swept on Monday, and we see a swing low formed yesterday, and we're seeing plenty of fair value gaps up here, so opportunities for retracement. So we'll have to see how we get on there. So yeah, just going to see how the rest of the week goes. If we look at the Forex Factory events calendar, there was no significant news today, and tomorrow 8:30 a.m. We've got some high impact USD news, so just need to be extra careful and keep an eye on the markets then. So yeah, hopefully you enjoyed this market breakdown. Thanks for watching. Take care. Bye.